I'm Tanya Kerr with T. Kerr Property Group and the Russ Phillips team, and welcome to the wild world of real estate. As always, we want to give you a couple of updates so you know what's happening in your local market. Now, of course, you already know that it is a buyer-favored transition in real estate. Buyers have more inventory, there's more stable pricing, although they have more leverage in negotiations, and interest rates are still a bit higher, which is keeping some buyers out of the market, but it means that those sellers are more aggressive in their pricing. Now, interest rates could gradually decline, meaning that we may have a tailwind of buyer activity. But of course, volatility may also continue within the economic and political climates, which do absolutely impact our markets. Now, we're going to give you a couple of charts to reference, but here's something that's really interesting. As many people think that when the Fed makes an announcement, you're going to see mortgage rates decline, and that's actually not the case. Oftentimes, you can see the Fed make an announcement, but the mortgage rates may not change. In some circumstances, they'll actually go up. The Fed does not set the mortgage rate, and the federal fund rate does not necessarily correlate with mortgage rates. Last week's Fed announcement was nonetheless interesting, and it did show a bit of a divide in Fed members. The divergence is caused by differing opinions on what tariffs may do and how they may impact our economy. Some members of the Fed think that the tariffs may cause a negative impact in the economy, which would likely mean lower rates, while others are concerned with the potential inflationary impact, which means rates would stay closer to where they are. Either way, it looks like the Fed is going to pause on making any big decisions for the time being. Now, those that are predicting a change in interest rates this year are most likely saying that it's going to be somewhere in the mid to lower sixes at best. Some other interesting news is that the starts for multifamily homes are down while the starts for single-family residences are actually up. Now let's talk about our local market. In the Austin metro, we saw a 3.8% dip in home sales in May, while the median price dropped about 1.6%. And across Texas, resale homes are down about 10% year over year. Now, active listings in Austin jumped way up by 17.4% to roughly 14,670 units on the market right now. That is the most supply since 2010. Now, on a positive note, with that increased inventory also came increased pending sales. In the Austin area, we saw about 16% surge in the market, which means that there is additional buyer interest. That being said, buyers now have more leverage, and sellers have to price competitively and position well in order to sell in the market. Now, with interest rates, the average 30-year fixed right now is between about 6.8 and 6.9, with the Texas average at 6.81%. The 15-year fixed hovers around the upper fives and lower sixes. The forecast states that we are expecting a gradual drop in interest rates into the 6% range by the end of the year. But of course, I don't have a crystal ball. We pride ourselves on being your local economist of choice. So if you have any questions about the real estate market or just want to talk economics over a cup of coffee, please reach out to your agent and we would be happy to fill you in on what we're seeing and thinking.